Well, Bob, welcome. Here we are. It's spring in northeastern Pennsylvania, so it's about 30 degrees
It
outside.
is. It's a beautiful spring day, Liz. That's why I'm dressed the way I am.
Exactly.
So
So we've had an interesting week this week in the markets, and honestly, we've had an interesting few weeks in the
we have.
markets. We sent out a note to clients a couple of days ago, and but we thought it might be worthwhile to pop on a video and let's just talk about what we're seeing.
Sure. So I mean, if you go back to, we're in a corrective phase of the market. Markets are pulling back. Uh, you know, y- Markets pull back. Right now we're about down 5%. On average, you get 4 or 5% pullbacks a year. We'll
Right.
see how this one plays out, but and you typically get a couple of 10% pullbacks. Again, we'll see how this one plays out. Um, this started around February 10th, and if we look at, and what's interesting is if you look at the markets, at least as measured by the S&P 500, which is kind of what we tend to follow. The S&P 500 is down a little over 5.5% in the last, call it 4 weeks. But if you take those same 500 companies and you give each one vote, equally weight them, markets are down about 2.5%. And then if you take the largest seven, the Mag 7, we see that they're down a little bit over 11%. So clearly the pullback has been concentrated in the largest growth companies that, quite frankly, led the market last year.
Yeah, and it makes sense. I mean, that is a pretty typical move where you have something that is a leader and really super strong, which of course they were last year, where the market just says, hey, you got a little over your skis. We're just
Right.
going to pull you back a little bit, back to more normal ranges. But we just finished earnings season, and in that period, companies, for the most part, were growing strong and reporting good earnings.
Yeah, absolutely. I mean, when you go through and you look at the last earnings season, I think the number is around 78% of all companies exceeded the expectation of analysts as far as their earnings go. But the really interesting thing, I think, is that when you look at people's sentiment,
Yeah.
sentiment has been extremely what is referred to as bearish. By the way, counterintuitively, extremely bearish means that the markets are probably closer to a bottom than they are to a top. I'll give you an example, or one example. If you take the American Association of Individual Investors, about a week and a half ago, that sentiment indicator touched 60% of those polled in that survey thought that the markets were going to be lower 6 months from today than they are today. We have seen that level hit in recent years. The last time it hit that was October of 2022 at the bottom of that market when the market had pulled back, 20-30%. And then the time before that would have been October 2009 at the bottom of the great financial crisis.
That's a really important point. So what you're saying is that investor sentiment is at an extreme level where markets had already pulled back 20 to 30%. And we're seeing that level of sentiment today when markets have pulled back 5.
That's correct.
So I think that does give a sense of the level or the lack of comfort that people have with some of the policy changes that are coming out of Washington, and it's not a commentary on good or bad, just that there are so many changes coming out of DC at such a fast clip.
People are nervous.
Yeah, they
People
are
nervous, but I'm not sure that nervousness is going to follow through into the economy or into the markets. And the reason I say that is because when we look out on a broader basis, so we look across the globe, you look at Europe looks pretty strong. European markets look good. Asian markets look good. Many of the emerging markets are improving. You typically don't see that when you're going to go into a very difficult time period. In
Right.
fact, you see that when you see perhaps the opportunity for global growth continue to accelerate. So there's a big dichotomy between what we're seeing in the US markets, what we're seeing in global markets, and how people are feeling today. And I think you're right, it's because of that uncertainty that's coming out of Washington.
So at least from our standpoint, what we're seeing is we've got earnings season that was strong.
Yes.
We have what appears to be a relatively normal pullback
Yes.
in the stock market. We have the rest of the globe performing strongly, and typically, the U.S. being the major customer, if the U.S. were really going into a recession, the rest of the globe would be signaling that.
Yes, it would absolutely.
And so really the one outlier right now is in investor sentiment. And that could possibly be representing a buying opportunity if the sentiment is just a little out of whack.
I think so, but also I think we're also seeing, if you will, changing in the guard or changing the tides. You had mentioned how strong the Mag 7 were last year and how they're quite frankly not doing as well this year. But we're seeing other areas that look very, very attractive. And so we may simply be seeing a shift. It's not to say that these largest companies are going to be in for a hard time. They're going to track the markets and they'll do fine. They're great companies. But we are seeing shifts in the market. In fact, as you know, we have been gradually shifting our portfolios to take advantage of some of these things. And, I think at least right now, it looks normal as far as the correction goes. Can it go further? Absolutely. But I think that when you look at the level of sentiment and some of the other things that we discussed today, we're actually pretty optimistic as we look out a month, 3 months, 6 months, a year. Historically, this has been a pretty good opportunity to be invested, to get invested. And, if history is any benchmark, this should be a good time as well.
That's great. So, we're following the markets very closely. We're keeping our eye on the ball.
Absolutely.
It's not even close to golf season, but we're keeping our eye on the ball. We're right now. It's still, a good market until proven otherwise.
Yeah, I think it's a normal correction with a extreme sentiment that is affecting people, but sometimes extremes present opportunities.
Great. Well, let's hope this is one of those times.
Absolutely.
Great. Thanks.
Thank you, Liz.